everybody. It's been a while since I've been on this podium. It's a pleasure to be back, and it's a pleasure to see everyone in person again. I've changed my hat since the last time I was on this podium. I'm no longer in the managing a gold fund, but I'm very happy that Elena is still doing a wonderful job. I've moved over to a different part of the mining world. So both in terms of fund, a private equity fund, and also in terms of the metals that we're looking for. It's my considered opinion that the world of mining is changing. We're in the process of entering what I call a new commodity super cycle, and that's an easy thing to say, and people throw it around a lot, but there's a reason for that. There are two big mega economic trends that are pushing the demand for metals. Those two mega trends are the transition to the global green economy, what they're all up in Glasgow discussing right now, and the urban transition of 20% of the global population. The truth is, economic development of any kind is very, very expensive and very metal intensive. And I believe that this transition is going to lead to significantly increased long-term demand for metals. But let's move a step back and say, where is this demand coming from, and what is a supercycle in real terms? Supercycles are periods where commodities trade far above their long-term trend. And these are always caused by extended periods of industrialization and modernization. The two kinds that I discussed before, the green economy, so that transition, as well as the transition of economic development for a large portion of the world's population. And frankly, not just their economic development, but mostly their urbanization. But the problem with commodity super cycles is that they're volatile and they don't go in a straight line. And so people see prices today and they think that they're going to last forever. Just because silicon chips, demand and supply of silicon chips have been disrupted, and silicon chips and silicon is now going at a huge premium, doesn't mean it's going to stay at a huge premium. Eventually, markets come back to some form of equilibrium. And after a super cycle, the equilibrium price is almost always higher than it was when it started, but it is never as high as the peaks. So the last few super cycles were based on smaller trends, but they were always the same thing. It's industrialization and modernization. Whether it's rearmament or the urban development of China, the difference between this super cycle and past super cycles is that it's two megatrends coming at the same time. So the magnitude will be different. And why does urbanization and economic development mean more metals? This is why. The amount of metal in an individual iPhone is not significant, it's tiny. There's like, I think, 0.5 gram of gold in any given iPhone, and multiple grams of all of the metals you see in front of you. What is different is that we make 1 billion of these a year, at least. And 0.5 gram times 1 billion is tons of gold. And that is multiplied for the lithium, the graphite, the cobalt, the aluminum also in these phones, and the net demand, because you're creating, modernization means you're creating demand where there was no demand before. So it's new baseline demand. And the baseline demand that's coming after that is cars, and the transition to cars. I'll talk a bit about the demand for electric vehicles later, but in 2020, I believe we sold 2019, I'm sorry, 63 million cars all over the world. And in 2020, only 2.5% of those cars were electric vehicles or hybrid electric vehicles. I am not suggesting, and electric vehicles use 2 to 3 times as much metal as a normal diesel petrol car. I am not suggesting that in 2030, we are going to sell 63 million electric vehicles, because that's simply not the case. What I am saying is that 2.5% penetration is not going to be where it stays. It's going to go higher than that. And just getting from 2.5 to 10% penetration means increasing the amount of metal we produce for electric vehicles by at least 50% in the world. And why do I think we're going higher than we are today? It's because governments have promised. Admittedly, I think, to be very clear, I think they have massively overpromised. But nonetheless, they have promised, and they have made commitments, and they have put their money behind those commitments in a number of ways. But the UK has said that you're not going to be able to buy a diesel or petrol car past 2030, and the EU's gone even further than that and said you're not going to be able to buy an electric vehicle or a non-electric vehicle past 2025. Now, if there's not enough electric vehicles, just like there's not enough silicon chips for mobile phones right now, I don't know if they're going to be able to keep that promise. But I know that the entire industry is gearing up towards that number. The governments are supporting these changes and these promises they've made in various ways. They're promoting and subsidizing technological advances, which will mean more technology that will hopefully bring down the cost of making these machines, for lack of a better word. They're looking to massively scale up recycling from a base of less than metals recycling, which is less than 1% within the EU right now and within the US. Quite ironically, China, despite how they process metals, is incredibly good at recycling their lithium-ion batteries. We in the EU and in North America are not. We have changed our standards considerably in terms of the metal we want to demand. So it's this very ironic situation is happening where we decided that we want a green economy, which means electric vehicles and renewable power, solar and wind. But that means 2-3 times as much metal as we're used to mining. But we've also said that we want that mining to be done in a much more sustainable way than it's ever been done in the past. Where these two demands meet, I do not know, but I think that the global demands for more sustainable mining are here to stay. So as we transition to this greener world, this low carbon economy, we're going to need more stuff. We're going to need considerably more stuff, for lack of a better word. But in the specific stuff that we're talking about, the metal intensive stuff, 63 million cars, if we just get to 30% EV penetration by 2030, which is what, well, I don't know what's going to happen after we get out of COP26, but prior to COP26, 30% EV penetration by 2030 was the globally accepted mid-range of where we were going to get to. That means 40, and then we get to net zero by 2050. That means 10 times as much metal for EVs only demanded by 2030, and 40 times more by 2050. Now, to be very clear, I don't think we're going to get there. I think we're going to drive a lot less cars, to be perfectly honest. There's not enough metal. They can't make them even if they want to. But nonetheless, those are the targets at this point in time. And if we only get halfway there, that means 5 times more metal for EVs by 2030, and 20 times as much metal from various sources, including recycling, by 2050. Solar PV, to get to net zero by 2050, means 14 times more metal just for solar panels, and 9 times more metal for the installed capacity of wind to meet the net zero by 2050 goal. As I said, these are ambitious targets, and there are significant supply chain issues into making them a reality. But for the time being, the world is trying. This is what the World Bank Group based on degrees change per annum. This is how much metal and minerals the world is going to need up to 2050 to get to different degree change scenarios. Those degree changes are basically business as usual, still needs more metal, 2-degree change by 2050, or 1.5 degree change by 2050. And that's a whopping 4 times more metal than we actually produce in the world today. To be clear about what metal is used, I've put in sort of the basic chemistry of a solar PV cell. Copper, silicone, aluminum. It's not all lithium-ion batteries. It's a lot of other stuff, as was discussed earlier today. The electric motors that make the windmills turn and that make the cars work have irreplaceable rare earths in them, which we don't have any methodology of recycling right now. Wind is staggering in terms of how much metals and mineral it uses. And they're only talking about making the windmills bigger. And then the cars, which everybody loves to talk about. This is the 30% by 2030 scenario and how much of the specific metals that go into EVs that we need. We have made the 2021 targets, so this has proven so far to be accurate. And right now we have capacity to increase metal supply to get us there. But at some point in time, there simply won't be enough projects to get us there. Different minerals have different capacity in the world in terms of what they need. This is how much we need by 2050 in terms of annual demand as a percentage of 2018 production. There are some clear winners and some, I mean, everyone does well, we still need to mine it, but there are some clear, not as attractive. Lithium, it's irreplaceable. We need 5 times more lithium than we presently mine today on an annualized basis. Vanadium, 2 times more. Indium, which is actually in every touch screen you ever touch, there is indium. That's what that tiny little thing is. And graphite are the big winners in this. Cobalt, this is where desire versus reality hit each other. The truth is, cobalt's mined in very few places in the world, and it's found in very small quantities in the world, which means it's not sustainable to make the present chemistry of EVs. While to get to net zero by 2050 and put all of the cars on the road being EVs based on the lithium-ion battery chemistry, I personally do not believe that is going to be the dominant chemistry and that we're going to need 400% more cobalt. Actually, no. If we would need it if it was that chemistry, but there isn't that much cobalt in the world. Even if it wasn't found in very difficult places in very small quantities, there's simply not enough cobalt in the Earth's crust to mine that much. Therefore, we're going to have to find a different chemistry that works in the long term. And they are actively trying to do that, but despite what every single one of the battery manufacturers and car manufacturers out there say, they don't have a good solution for it yet. Because cobalt's a stabilizer. Cobalt stabilizes those batteries. If they don't, they go boom. For lack of a better way of explaining it. But it does give you an indication of what I'm trying to get out there is what we've mined in the past, or at least in the past 20 years during this industrial revolution. The green industrial revolution is going to change what we need to mine for. The mix of minerals that we're going to have to mine for in greater quantities is going to significantly change over what it was before. This is from Rio Tinto. This is what they anticipate we're going to need for new technologies. So that brings us to the sort of summary of all of it. We need a lot more metal, and there is no question that we need orders of magnitude of more metal in order to fund the green economy. And that is all for the purpose of decarbonizing the world. But there is a catch-22 here. There's a big, huge caveat in the room. What all those people those protesters up in Glasgow are saying, and what every ruling in the world is saying, what Daimler, Chrysler, and Volkswagen, and Ford have all made public statements towards, and is that they don't want those metals and minerals if they can't ensure that they have been mined sustainably or obtained sustainably. And they've made that very clear. There's something called IRMA, International Responsible Minerals Association, and they've come out with a certification that at present, not one mine in the world can come up to. But according to Daimler, Chrysler, and Ford, by 2025, every gram of metal that goes into one of their cars is going to have an IRMA certificate attached to it. They're putting their money where their mouth is. And they might have to pay up to get those sustainably sourced metals. And the entire global manufacturing industry is headed in that direction. Apple has even gone so far as to say that they would like 100% of their phones to be built with recycled metals. The fact that there isn't enough recycled material in the world to build those phones is a completely different question. And the fact that we actually can't recycle a number of the things in iPhones. But nonetheless, these huge corporations that have huge amounts of money, that dominate, that are being pushed by consumer interests to change the way that they do business, have said that the raw materials that go into their products need to be sourced in a very different way. And if you want to be in the mining industry, going ahead, and if you want people to invest in mining companies going forward, you are going to have to prove, because of legislation and demand, and end user demand, that you are producing sustainable metals. And that means from the very first day, sorry, let me go down here. The very first day that you start looking for a mining project and developing a mining project, you need to be doing work for environmental, social, and governance levels that have, in a way that's never been done before. You're going to have to get the same way that the mining industry used to get 43101 reports and feasibility reports on their, for mineral audits and for engineering. At this point in time, JORC code has already incorporated ESG elements. The 43101 is heading that way. But assume that you are going to need an equal level of report to show that you have mined throughout the life cycle, from the time you started looking for the mine, sustainably. And nobody like me can invest in you going forward, because we're under huge pressure from the financial services regulators. No one can invest in you unless you can demonstrate that. Now, there are other investors that aren't located in the Western world, that aren't governed by this legislation, and whose investors don't have the same qualms. So there are other pots of money. But if the pots of money you are looking for come from the West, for lack of a better word, ESG-driven mining is the future. Now, to go back up a little, we discussed earlier that recycling. It is my profound belief that the metals demanded for the green economy and economic development will not just come from mines. It is physically impossible to get that much metal out of the Earth's crust. It's also not sustainable. I think recycling is going to change significantly. But recycling is an industry that is in its infancy. It's where solar panels were 30 years ago. And we are going to have to work a lot harder to find the ways in which we can recycle effectively to be able to reuse some of the metal from all of these EVs and battery and phones and windmills in order to get there. But I really think as a trend in the metals and mining industry, we need to be looking to recycling and producers need to establish that they are looking to that they are capable of incorporating recycling into their long term. That's about it. That's where I see the demand in the industry going. And the fact that I think the new paradigm for miners that they can't ignore is that they're going to have to consider environmental, social, and governance factors in every aspect of what they do from the very beginning, from exploration all the way to closure. And that's just a learning curve that we're all going to have to get on. The upside to that is the reality of demand and supply and economics is that we're going to get paid for it for the first time. So for those of us that are willing to mine in that manner, I think that there's going to be a reward for doing so. That's it.